Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on MULN. It's only down 99.9% in a year. This is merely a flesh wound and the turnaround is near.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey everyone, welcome to Laughing Stock. We're back here today, this weekend. Been a week since last time. None of us has been able to do any streams in the week. But how are you doing? How was the week?
I'm good. The week was good. The market's kind of bounced back a little bit. I think we're all kind of just waiting to see. On Monday here is the inauguration day, so Trump's going to be in. There'll be a bunch of things that happen. It's also closed Monday because it's MLK Day.
Yeah.
Shout out to the king.
Yeah.
But other than that, the week for me was good. Friday was my worst day. I was hoping I would end on a strong note, and Friday I got stopped out of a bunch of stuff. And but I have been trimming well. My execution in terms of not doing something stupid was really good this week. The only thing that I would critique myself on is just some of the stocks when I was going back and forth between, if one or two kind of came up at the same time and I'm trying to pick one just because of the funds, like how much I actually had available to put cash in wise. There was like one or two that I would have changed up. I bought AORT over Cypher or Sol, and they both looked good. Cypher, in hindsight, though, it would have been the better buy. Number one, it's a smaller market cap, so the chance of it actually doubling from that point was much higher. And it was also, it's been a strong mover for a long time. And that category of stocks I hold very highly now. If something's already moved, 2 or 3 times in a stair-step motion, it should be on your radar no matter what. And the worst part is of the entire big move it just made, I think it's up like, 60% this week or something like that. I saw it at 3%, so I could have gotten in there. And I decided to go with the other one, which it was just a minor gain. Actually, I might even have got stopped out of that one. So that hurts in terms of, wish I would have got the other one because that would have been a huge, huge win. But it's, 1 week. So besides things like that, which are learning, next time I'll pay more attention to those because I think those are more important. How about you?
No, my week has been decent, I would say. I also got stopped out on Friday on ZVIA. These letters, Dane, they are hard for me. ZVIA, ZVIA, which I thought it could run a bit more. I barely got stopped out, and then it pulled back a little bit. So I'm gonna keep it on my monitors because it's in an interesting area now. But before that, I took a gain on Faro, which gave me a 10%. It was in 2 days. It went up 10% for me, so I'm pretty happy with that. I've also looked at a few other things, and I actually experienced a little bit same as you, just in another ticker. I was tracking a Matrix service company. The ticker is MTRX, and I decided to not go into it, and that is a mistake so far because I got stopped out on the other one, but this one kept running. But at the same time, I looked at it a bit like. As long as you're gonna look at the amount of tickers that we do, and every day, you know, you're gonna have these things where you pick the wrong one and you miss out. But it sucks when we try to concentrate our picks down to like one or two per day. You kind of obviously want to choose the right ones, but I think this is not gonna happen. You know, a few times. I think this. You will see this a lot. That something that you looked out is the one you should have gone into, I think.
Yeah, and like I said, it's a learning. You know, I picked when I was going back and forth. You know, I think one of the things I was thinking against is because it was already up so much, which I know doesn't make any sense, but it's just like one of those mental hurdles that I have to get over. You know, especially being traditionally more of a value style investor. So the always buying at the top, sometimes it's just it like just throws me off if it's been moving up that much. But you know, that's how these things go. You know, it has to, everything that's gotten big's got to get in there from somewhere. But the other big thing too is just like kind of the illiquidity. In the morning there just wasn't a ton of volume on that one, which was, it's not necessarily always a bad thing, because early in the morning, if it's breaking out, there doesn't seem to be much resistance and the volume hasn't like really taken off. That's not necessarily a negative to me. Sometimes that I like that, because that means I'm catching it probably really close to the start of a move. Now it might not work out, which is fine, which that's the whole point of the stop loss. But with, you know, something being up only 3%, and it must have been up just over 4%, because I don't screen for anything unless it's up at least 4% on a day. So it must have went up and pulled back a little bit. And maybe that pullback is kind of what made me wait. But maybe in the future, what I'll do, instead of just, you know, going like, okay, you know, I think I like this other one better, let the charts just kind of work for a little bit. Because if I remember right, AOR did have like a decent day, but also pulled right back. And like I said, it's just a bigger company. So the chance of it making such a big move compared to Soul Strategy is like, it's not there.
No.
You know?
Yeah.
So.
And Cypher went up almost 6% on Friday too. Another ticker I know
Friday
also.
Too, I saw it right in the morning. It was up 25 right when it first opened. So if you would have, you know, sold right there just into strength in the morning, I mean, you could have made almost 100% in 3 days.
Yeah, which is insane.
Right, that's what I'm saying. If you can hit one of those here and there, I mean, that can make a month for you.
Yeah. We can go back to the chart a little bit later on that one, because I have a question for you a bit later. But another ticker that I know that you also looked at was SSSS, which is kind of the opposite. That broke down instead of moving up. So I'm happy I didn't move into that one.
Yeah, I think this is one of those ones where, to me, actually, it looks kind of good here. And if it can break out again from this point, maybe this is where you get interested.
Yeah.
You know, and this is what I was talking about, like Miniverni's, or I'm sorry, however you say his name. Like it consolidates there on like the 13th. Looks really good actually right there. And then it breaks out. Now it's tough to say you'd get in on that day, but on any of those real pinched candles there, I don't know if you got the chart up.
Yeah, I can switch screens. Hold on. Here we go.
Yeah, you're good. But just on the 13th, right before it actually broke out, like that's technically where he would call it like a cheat. You would start to try and get in right there on that really small candle. Yeah, right before. Yeah. So if you were able to spot somewhere in there and get in and then catch that first big jump, I mean, that's one way of doing it. But it's tough. And yeah, to be honest, it probably wouldn't have. I probably wouldn't have bought in this one. Just by the time it actually would have been a buy, it would have gapped up already too much.
Yeah.
Sometimes it just doesn't kind of work like just in terms of how it's broken out, it just doesn't work sometimes. And you can't beat yourself up over that, as long as everything else looks okay.
But like you said, though, this can still turn around. So it's not, I'm not gonna dismiss it entirely. Just, it looked promising there on the breakout and then just moved back.
Yeah, but like I said, it could still go. I mean, if you look historically how it's broken out, it's had some big moves, pulled back quite a bit, and then made another big move. And actually, if you're looking at this chart, this is a good one to say that as it starts to break out from the base, instead of looking at like the resistance that you see around, what is that, like 640-ish?
Yeah.
If you were buying more towards a base, like you see how it almost double bottoms there.
Yeah.
On the last 2-3 weeks or whatever. Every time it's taken a big move off in the past 3 big moves, if you would have bought towards that base, you would have been fine. So it's one of the things this week, if you pull up USEG, USEG was one of those stocks that I liked, and I didn't buy it on one of the days because it wasn't quite where I wanted it. So what day was that? That was January 13th. I wanted to buy it and I waited kind of, and then it kind of took off on me. So I kind of missed my opportunity. And the reason why was because volume in the morning was super low. It fit all my other categories, but the volume was still really low. So I didn't want to get in. And then of course, like I think I was looking at it at, maybe it was the day before, because I was looking at it at $1.91. Anyways, it broke out from there and felt like I kind of missed it. So the next day I saw it do this huge red candle on the 14th, and it started pulling back towards the Bollinger Band. So I just put an order in at Bollinger Band, which was 201. That was literally marked the bottom. I literally bought the very bottom using the Bollinger Band there, and then was able to turn it into a huge profit the next. I mean, not a huge profit, but either way, what was I up? I think when I sold it, I don't know, like at least it turned, I shouldn't say huge because it did pull back, but like, let's say it was like 6 or 7%. So it wasn't a huge profit, but no, actually, now that I'm looking at it, no, it was a good profit because I did get in at 201. I was just trying to figure out from the candles where I got in, but yeah, actually from 201, I think I sold around like 220. So it was more like 10%, and it was buying off a Bollinger Band. So not that's my normal way of buying into something. Sorry, what'd you say?
No, that was only like 2 days, right? 2-3 days?
Yeah, it was 2 days because I bought on that second, and then the next day it kind of like came back down. It bounced down, and luckily I didn't get stopped out. And then that next day I just sold. So, but that's, once again, we had talked about this, I think last week, about buying off like a dip point. And I do find a 5-day moving average for Bollinger Bands tend to follow the bottom of these upper moves very well.
Yeah.
Now, I'm not saying by all means, don't necessarily buy those. You got to do a lot of research to figure out, and it's a huge risk doing it. But I see it consistently with these big upward moves that if you didn't get in at the start, why not put an order in somewhere towards that? Because if it breaks down past Bollinger and the momentum's probably over anyways, and who cares? You would have got stopped out anyways. So if it pulls back and I'm able to get in at a second point closer to where I would have wanted to buy on the first day, I think that risk is kind of worth it to put the order in, because no matter what, if I had bought on that first day and it had come up and I came back down this far, I would have got stopped out anyways.
Yeah.
So, and this is only with these ones that are pretty volatile. Like you can see some of these candles are, pretty big moves, 15% a day, so it's really up and down. So this is a tough one just because you'll get stopped out. But that's another thing too, when you see like a lower market cap like this, like 62 mil, these ones are going to be more volatile just because the price can fluctuate so much more, especially when the price range is only in like the $1, $2 range. Anybody can buy that and buy lots of shares.
Yeah.
So,
we were both in Faro as well, right?
Yeah. Faro was another good one this week.
I really liked how that chart looked, and
Yeah, this is a pretty obvious one. You know,
Yeah.
I believe I bought on the the 15th, and it was a
Yeah.
bit of a downward move, so I kind of waited for that one.
Yeah.
And then I don't remember exactly what I got in on, but then I was able to ride that up. And the only thing, like I said, is it pulled back like what was that, 3% on Friday, which pulled back a little bit. But I mean, you know, we're still talking the risk reward ratio here. I'm shooting for 3-1, which I've been getting between 2-1 and 3-1 on most of these. I have, like I said, I did get stopped out of some names, but not a ton, to be honest. I mean, I have a 3% stop rule right now, just based on what I see in the markets, but that might loosen up. And the other thing too is because I didn't get stopped out of many, maybe I'll keep 3% because I mean, all it does is limit, you know, your downside.
Yeah. This one is one I sold before the 3 days has went by. I sold after I got my 10% goal, and my thinking behind that was I wasn't sure, but I just like, okay, this went pretty quick. It was only 2 days and I was up 10% on it. I thought, okay, I'm just gonna take it here. And I didn't let it go to the third day, which in hindsight I could have sold someday in the third day and got more than 10%, but it did end the day below where I sold, so I'm pretty happy on the decision. But yeah, what's your thinking about that?
Yeah, because we were kind of talking about this a little bit before. So there's a few different things that, you know, I look at here. Like Pradeep, for instance, always says you don't buy on the third day of an up move. So if you look, technically the 14th, even though it hadn't broken out yet, I mean, that was the first big move. That's kind of what got everyone's, you know, seeing and all. And by the end of the day, it had reached basically right where it's about to break out. And then the next day it did break out.
That's where I bought, and I bought like just before the close that day.
Yeah, and we've talked about that. I don't think that's a bad strategy. I would say that probably half the opportunities do come first thing in the morning. But I do see tons of times where there's usually 2 or 3 periods during the day I see that seem to be good buying periods. One's between like 10 and 11. And then I see another one usually around like, I don't know, you see stuff take off around like 1 o'clock, just kind of like a late mover. And then at the very end of day, usually within the last hour of before close, those are the times where I kind of peek at things and see if there's anything that meets my criteria, and that's where I'll get in. But so there was the 3 days there. So you technically, I mean, you know, I'm saying sell on day 3. If you want to count that first day as part of the move, because it did technically break out on that day.
Yeah.
So you might not have actually been wrong to say to sell on the 16th. And then just in general, I have a few like thoughts on doing something like that. Like, you know, if my risk reward ratio is 3-1 and, you know, I'm shooting for a 3% stop loss and trying to get 10% on the market, you can go at 10% always, and it limits the upside, but you can also, what do you call it? If you're breaking that, sorry, I'm trying to think how I want to say this. If you're always doing 10% with that kind of risk reward ratio, like you at least know where you're going to get out on all those names, and you'll limit it in terms of what your upside's going to be. But it depends on the market, because if you're already putting your stop loss at 3%, it's probably because you're assuming most things won't move much more than 10%. Like if we're in a really bullish market, where I'm setting my stop loss is going to be on where I think I can get. Like if I keep seeing 15% returns or 20% returns, then you could set your stop loss at 5% or 6 or 7%, and that'll keep you in more names because the markets are more volatile. Now in this market where stuff doesn't seem to be, you know, going up quite as much, it also shouldn't go down quite as much. So you can probably keep that tighter stop loss at 3%. And then, you know, around 10, it should be when you are considering getting out anyways, you've already met your risk reward ratio. And the more that you wait on those, the more chance you have of them pulling back, because stuff just isn't making those bigger moves right now. As we get into a market where, you know, stuff keeps going up 30, 40, 50%, and that's pretty common. On those ones, I would probably rather wait for a few days just to kind of like let things shake their way out instead of trying to trim exactly at those. So it just kind of depends on where we are in the market on whether I think I should be getting out right around 10. And I will say in the past week, there's times I just sold at close to like what you did. And then there's other times I give it that extra, day or so to just see what happens. And from there, I'll figure out what I want to do.
Yeah. I must admit, part of why I just took the whole profit at 10% also is that the previous week was not a good week for me, and I've been a bit hesitant to jump into things and stuff like that. So I also just wanted to get a win and get started. It's also a psychological effect also. So I was just thinking like, okay, now I have the 10% because there's been so many times now in the past where I have had the opportunity to take some gains at 6, 7, 8 up to 12%, and I didn't do it, and then I got stopped out instead at a loss. So I was just also thinking about that when I did it.
No, and it's a smart way to look at it, because if you think about it, all the times that you've bought into a name and it's moved up 6%, if you had just sold there, now like just saying, like, let's assume you had a 3% stop loss, and that's a 2-to-1 risk reward ratio. If you were doing that, you can do that consistently. You're going to be fine. I mean, I've sent you the chart on what your hit rate is. If your hit rate is around like 30% and you can do a risk reward ratio of 3 and 6, you're going to kill it. On those ratios, I think like, and we're talking 10% moves, but maybe 6% is probably something more realistic to look at in these tighter markets, and only go for a 2-to-1. There might be something to that thought as well, because obviously you're going to get a lot more winners, by doing that. But if you were saying, like, let's say you shoot for 10%, at 10%, I think if you get, it's like, I don't know, 6 or 7 of those, on average, and you only get stopped out of like one of them during those for like every other, I think it was at a 40% risk reward ratio. So we'll say 2 out of 5. If you were to do that with 2 out of 5 at 10%, like 8 or 9 of those in a row equals a 200% on your portfolio, depending on your actual initial position sizing. I think that would be at like 20%, which would be high, but it depends on the amount you're trying to risk. But I mean, that's saying in 20 trades that you could technically be up by 200%, or no, that would be 50 trades. But either way, you could do that in the course of a month, essentially, and be up 200% a month. Yeah. Not saying it's as easy as said as done, but that's just how the math would work out.
And I think, in some entries you get a bit lucky and things start to run up straight away, and those are easy, because you just raise your stop a bit and calculate where you should take off maybe and trim the position and stuff like that. But a lot of these names that at least I'm looking at now, the moves are maybe between 4 and 10% in a matter of those 3 days that we're talking about. So to also take those profits when you can, I think, and then just aim for those bigger ones, which you will notice pretty quick. And then if you manage, like you say, to pick the right ones then and limit the downside with the 3% stop, it should work in the long run. But the hard part then is to go into the right names, right?
Yeah, I mean, like I said, I'm looking for pretty clear breakouts. I feel like if you look at Faro looks like a pretty easy chart to read. So, and as long as you follow like a decent entry rule, because on that first breakout day on the, what was that, the 15th? We'll argue the 15th actually where it breaks out. That's a down day. You have a red candle on yours, but at the same time, if you just have some rule in terms of looking at an intraday chart, then you can get in on that day and still catch the entire breakout or most of it.
Yeah.
So there's a few things you have to consider on these, but this one looks kind of obvious to me.
Yeah, no, I agree. I like this setup. The one I didn't take was this matrix chart. This also looks a bit obvious now when you see it, but I looked at it here obviously, and it run up a little bit too much for me. That was what I was thinking, so I didn't take it.
Yeah, and I mean there'll be times, like I said, it just won't work out to your criteria. It'll have moved too much on you that you're just, you don't want to take the risk on.
Yeah.
But this is a good example of, I know Pradeep says to sell after 3 days, but what I've noticed more so is like the breakout really occurs on the 16th here. I mean, yeah, technically what was this, the 15th, you can see it get there, it bounces back up there, and that's already been moving for 3 days. So if you had just been, I'm not going to sell because it's been up, or buy it because it's been up for 3 days. Yeah, but you're saying you're not going to buy right when the setup finally works. That's right at the breakout.
Yeah. And also, if you look at the volume here, it's just like day by day increasing by a fair bit,
Yeah. And I mean, the only other thing I would say is it's not particularly strong volume. That's the only thing that kind of keeps me away from some of these kind of names.
Yeah.
Not that 300,000 shares isn't enough. Depends on how much money you're trying to push around.
Yeah, but I have to say also. Part of my thinking of not taking it was I saw the earnings here on the run up. Obviously, the market liked these earnings. Probably, I did not check this actually, but I assume it was like the future guidance that sent the stock up here, because the earnings they missed a little bit on the estimates. So that was also in my thinking, and then. On the day of these breakout, I couldn't find any particular news on it, so it just made me a bit hesitant.
Yeah, and at this point, I find setup more valuable than news. Don't get me wrong, I hold news very highly because that's really what's going to move something. But if you're saying that they're on the 6th was the day that they had their earnings. The market reacted well to that. So once the market reacts well to that, you see from that point on, like you said, they didn't crush it, but they must have hit enough numbers or changed some analysts' opinion that all of a sudden this becomes worth more around this $13 range.
Yeah.
And then it moves around there and then it pulls back a little bit and then finally breaks out from there. But that's just like the classic of supply and demand. Like, it had made this upper move. Probably a lot of people got out slowly in this time. Nothing's going on. And then because there's no one interested right here, there starts to become some buyers coming in who've probably done their research and like the company at this point. And then from there, the momentum guys see it when it breaks out. So, it's one of those things that takes off, 30% in a small amount of time, 20%, whatever this move is.
Yeah.
So I would say that, I know on the actual 16th, it didn't have any news. But this news is still all in relation to the news that occurred on November 6th.
Yeah, on the earnings.
It's the actual breakout's just taken that long for it to kind of consolidate, break down, and then push back up when there's finally buyers again.
Yeah, it's just something I experience also when the market is open and you're looking at 100 things. Sometimes I just move too quick to check up on what happened there on the earnings report 6th of November, because it's also a long time ago, you know what I mean?
Yeah, it's hard to say how much merit that it still has in terms of what the move is today. I agree with you there, which is why if I see good news back then, or I see the stock made a move back then and the market at least appreciated it, it kind of gives me confidence just going forward that the overall trend is in an uptrend, which means market sentiment has been growing, not lessening.
Yeah. And on that day also it took out some of the previous highs that it has had in since 2023. So yeah, the setup looked good though.
Yeah, another one I was kind of kicking myself over because I saw it and I didn't get in on it. And it was actually, I think at that point I had spent my cash. I actually, at one point, I think it was on Wednesday, I was fully invested, which is rare. But there was finally like a bunch of names and everything had been kind of slow up till that point. But on the 16th, it started like a very obvious breakout. And that would have been a great day just to hop in. And it's still held up even on Friday, but it's made a pretty strong movement 2 days.
Which ticker?
ISSC.
Oh
Sorry
yeah,
if I
yeah,
didn't say that.
yeah. I have it here. Yeah, I agree with that. I also saw that. This one.
Yeah, it's just another obvious one that's reached the point. It has excellent volume.
Yeah. Previous earnings was a beat also. Just in a
and
general
you know,
uptrend for a long time.
it broke out pretty clearly on the 20th, and this has been a long uptrend move since, I don't even know, July.
Yeah. Exactly. But if we go to the Cypher chart, Dane, Sol strategies.
Mm-hmm.
If you look at the chart before, before September, I guess, or in September, this is worth almost nothing.
Yeah,
Is
and I
that
mean, this
something
is
you look? Is that something that changes your thinking, or does it not matter at all? Because
it doesn't matter just because of the move it's made.
yeah, that's
So,
what.
for
Yeah,
instance, and this is why when I screen for stuff over $1, because it eliminates so many of these companies that basically die out. I mean, this was literally trading at 6 cents
yeah,
back in May,
Yeah.
so, or June, whatever that is. So on that point, no one's looking at this. It's totally illiquid, so it doesn't matter at all. But then by the time I'm actually starting to look here, it's not until like this move up in October. I would have argued in October you could have gotten in on this. And then once again, it breaks out kind of at the start of December, somewhere in there. Maybe you could have taken a position. And once again, it just has that strong upward momentum move. There's still a lot of volume coming into it. So I see what you're saying. It's definitely like a red flag, but I feel like at this point, we're already far enough away from this crazy move it made way back in September and October that it's far enough away for me. It doesn't matter.
And this has some decent volume too when it starts to trend upwards.
Yeah, I mean, you think about it. I don't know. I just want to see what their outstanding share count is. Sorry, this new Yahoo still throws me off.
I think 92.3 million.
That's their share count?
That's the float, shares float, yeah.
Yeah, okay. So, I mean, starting on September 30th, there's a few $2 million days, then there's a bunch of 1 million, there's a $4 million day, then there's like I don't know, just counting the days of higher volume on the buy side, I get, I don't know, almost like 40-50 million shares being moved, at least, probably around there, 40 million. So about half the float has been bought during this last move up. So that's enough. I mean, that shows me that there's enough people now that are holding shares in this, that this should be interesting.
Yeah. Yeah, okay.
Yeah, and who knows? I mean, like I said, I didn't buy it, so maybe it was part of my hesitation.
Yeah,
at the time.
But again, though, the chart looks like the other ones, pretty obvious, right?
Yeah, this is, that's why as I do this, a lot of people are, I don't know. I think people put so much emphasis on their screening process, but they don't put it on just finding the clear, obvious setups.
Yeah.
When you're looking at stuff, it should be towards, some kind of high, whether it's the 52-week high. You see a lot of these are all-time highs, or 52-week highs, or you could go by the last month high, whatever. It doesn't matter, but that's where you're trying to find these breakouts. And it's tougher to find ones just because when you screen through and it pulls up like 70 names, it's tougher to find the ones that are breaking out from maybe like a base or something like that. But if you do a quick screen the day before, I mean, you can get in on a lot of those names.
Yeah.
Well before the actual breakout. And like I said, Pradeep talks about the 4% rule.
He has,
he talks about using the cheat. So there's different ways to do it.
Yeah.
And then that way you're getting in right before the big move, which is even more important. If you can do that, I mean, that'll.
I know Stockby, he also has that indicator on his charts where it notices when it's jumping up 4%.
Right.
Yeah.
So
another ticker we looked at this week was EOSE.
Oh yes, got stopped out of this one.
Huh?
I said I got stopped out of EOS.
Oh yeah, because a little bit similar to a couple of the other ones we have gone through so far. This also had a pullback on Friday, but it looked good on Thursday, right?
Yeah, and I mean I've been following this company for forever. This was actually one of the first stocks I bought, and it did really well. It was back when I was doing value, and or devalue, I should say.
Yeah.
But yeah, made a strong move, and it didn't start to break out until around that upper fives ish, 570 ish. So I think I got in somewhere in there. It looked like it was going to continue to move, and then I can't remember. I think on either that or I tried it Friday and it just pulled back. It didn't continue to break out. So this one might have another opportunity on Tuesday if it breaks out from here again. How high it goes, I don't know. I have no clue. And it's already made a pretty big move. I mean, this is, you could argue it's fourth leg up.
Yeah. And it had some analysts upgrading the price on it and stuff like that.
Yeah. And, this is one thing I've been just kind of going through for food for thought is in terms of market caps. As the company gets bigger, obviously it becomes harder to grow, and only so many things are going to be able to get to like a certain size. And in terms of your screening process and being able to eliminate things, if you just look at the amount of stocks that fall into different categories, it starts to give you an idea of what your odds are of something continuing to make big moves. So for instance, this is around $1 billion. If you look at the overall, let's just say kind of the general market of stocks, and I'm talking stuff that's not like, sub 20 million, 25 million in market cap. So it kind of eliminates a lot of that garbage and stuff that the stock price is, let's say, under $1-ish in that range. If you're taking all that stuff out, because that's like 3,000 or 4,000 stocks that you eliminate right there, you're left with about 5,000 stocks in the overall American markets. And of those 5,000 stocks, if you were to focus on anything that's basically under like the $4 billion mark, the chance of it getting up to $4 billion, well, there's so many companies that have made it that size and are down. So that's, I think it's like 80% of the market is in that range. So once you get over like $4 billion, that's only like the last like 15 to 20% of stocks. So your chance of getting stocks to make big moves once they're over that $3-4 billion mark starts to depreciate very quickly. The amount of stocks that make it from 3 to 6 billion is much smaller than the ones that make it from 1 to 2 billion. So, and same thing if you go down to 100 million. There's a ton of stocks that make it from 100 million to 200 million, or into 2 to 4 and 4 to 8. But as you start to get into the billions, there's less and less that start to continue. Like there's less that will go from 1 billion to 2 billion, and less that go from 2 to 4, and way less from 4 to 8. So if you're buying a stock and it's at, let's say, $4 billion in market cap, the chance of that doubling to 8 billion, it goes down drastically.
Yeah.
So in terms of you just opening up your market in terms of bigger momentum movers. Now, granted, if you have like a few $1 million in your account, yeah, you do have to focus on the bigger stocks and just take smaller moves. But you have a smaller account, you don't want to be really looking at those stocks just because it lowers your chance of getting in. So as some of these you wonder how high can something go before the 52-week high starts to warn you, or all-time highs start to warn you. I actually see that more so as in terms of it becomes depreciating returns as that market cap gets so big. You can only catch momentum in those areas for so long. And eBay is a perfect example. We had talked about eBay. It made that big move because of Facebook Marketplace was basically going to say that they were going to put eBay stuff on there as well and give it kind of a trial run. And you can see that the stock on the 8th, was it? Took off because of that news.
Yeah, with great volume.
And I looked at it. and it was only, I think it was up like 8% when I looked, and it did get to like 12% or 11% that day. So it would have been a small return. But then you see the next day it broke right down.
Yeah.
It's just because for something to sustain such a big move, it's really hard. And there's a lot of institutional investors who have probably been holding this for a long time, at least since, anywhere from down here in the 40s to maybe in the 50s. So anytime you see some of these big moves in a lot of these bigger companies, they pull right back. So a lot of these are always false breakouts. This one gapped up. You could have argued once it hit 10 and maybe you call this an EP versus a breakout. But to me, I see this market cap's around 30 billion. When it was up at, the day that it broke out, it would have been more like 35 billion. So the chance of something like this continuing to gain strong momentum is drastically lower.
Yeah.
Now, don't get me wrong. Back when this was down at, 40 million, you can see it kind of breaks out on February 28th. It was at $43 a share, which means that the market cap's, around like 10 billion. So from there, it was able to, was that 10 billion or whatever, like 15 billion? You can see it went from 15 to 30 in this time period, which number one, that's taken an entire year. Yeah. And,
that's roughly up 50%.
Right. So my point being is it's not, you're just looking for, like, this shouldn't be what you're looking at if you're doing momentum. If, like I said, if you're a big institution, you'd be happy to buy this there and wait this out for the whole year.
Yeah.
But we're nimble. We don't have to look at these ones. So like a lot of this stuff, even though it might have broken out or something, you can eliminate this right out of your screener immediately because you shouldn't be looking at this.
Yeah.
And we talked about how QM uses ADR and ATR, all that kind of stuff. And yes, that does work, but sometimes I don't have the time to necessarily go searching for what the ADR is of something. I know if you have it set up in your thing, you can screen buy it, but I don't even need to screen buy it. I can kind of look at the chart and the price of a lot of these things and know real quick what the ADR is, ballpark figure.
Yeah. And maybe even more so on eBay, just because it has run up like 50%, like you shouldn't expect a big move again,
Right. That's what I'm saying is like, and now for this to go from 30 billion to 60 billion, it's going to take a long time. You know what I mean? That's going to be like earnings. When you get to this point, this is where like you really need to start watching earnings reports and stuff, because that's really going to determine if this continues to push higher and higher. And it starts to get into real investing, and you really have to know the business and do you think it has a chance of pushing up from here?
Yeah.
So once you get up to this size, yes, I think you would have to invest in these kind of companies. I don't think you can trade these, or you really shouldn't be. The only exception to this rule is, there's like the Magnificent Seven and stuff like that. And those ones, just because they just get such crazy volume, there is exceptions to the rule. But like I said, that's 7 out of the top, let's say 500 companies that like most people are even watching. So if you're looking at that top 500, there might be less than 10 of those that are continuing to be big movers. But do you really want to limit that to that's your choices? Because it's tough enough to focus on, that few stocks anyways, when you could just zoom out, go to these other 4,000 stocks and focus on these ones, and these ones double and triple all the time.
Yeah. And this thinking is kind of in line what we have done all the time, right? In the daily moves and stuff like that. We have been very, not strict. Strict is not the word, but we have been consistently looking at, between what should we say, around 100 to 2 billion in market cap.
Yeah, I even under that. I'll go all the way down to 20 million.
20, yeah.
Now, and in the 20 million, it's not that I really want to buy stuff around 20 million. I just am trying to fund. I don't want anything under 20 million. It's only retail that's buying that, and a lot of those are pump and dumps. So if you're day trading, they're probably great. They're probably exactly what you want to be in, because they make crazy moves through the day. They could be up 100% in no time and then right down 100%. So those are, if you're day trading, that's probably a great place to actually look. just because it's garbage and it's all momentum based. It's all just people using technicals. Very rarely do you actually get, real deep value down there where someone actually has like a story and the business is really turning around. If you want to invest down there, you can. I mean, you can find some amazing investments down there if you catch something like that. That's similar to more, in value found like NutX. Like that was a really small company at the time, and since then they've done extremely well. But at the same time, too, we've proven that we could go through and flip stones like that for months on end. We can also just watched and the chart would have broken out on NutX, and we would have known to buy right there anyways, knowing nothing about the company. So, it just puts it in perspective of like, if you have the time to put in and actually do the research, I, highly suggest you do it because it just is going to make you that much better.
Yeah.
But for those of you who don't have necessarily all that time, there is other ways of doing things.
Yeah. Yeah, like you said, the market, or like we are talking about, this week has been a bit decent. And last week I showed you this on, not that it's something new or something, but a week ago, this was pretty far below the green line that I have put on here. Now it's briefly above it. So let's see what Tuesday brings. Like, I think we can have a big explosion in both directions on Tuesday. I think you see the crypto markets right now is it's doing pretty well. Bitcoin is at 104 again, close to an all-time high, but still, 104 has been a level for it to also pull back from in the past. I saw XRP has. This chart looks actually good if you scroll back to 15th of January on XRP. So I know there's a lot of crypto things that are going up now because of Trump and all that. But yeah, it's going to be hard to predict the coming week, I think.
Yeah, sorry, I'm just trying to pull these up here on my side. Yeah, to be honest, crypto, regardless, it follows the same patterns.
Yeah.
These are very clear breakouts.
Yeah, they are, right?
All the way around like $1.10, it broke out again. Then it broke out again $1.50, got up to like almost $3, and then it's been consolidating here, and then finally just broke out again on the 15th.
Yeah.
I actually don't really screen for crypto, but you could definitely do it.
Yeah.
Like if I was going to trade anything, it'd be momentum based on these.
Yeah, I have everything like this in a list, so it's something I look at, and whether you like it or not, these things also carry the markets a bit. All these big things, and there's heaps of stocks now. I saw in the sheet I made that the crypto and crypto miners has performed better than last week, so it's been a good week for a lot of those things.
Yeah, I mean 108 is the all-time high-ish, I think, for Bitcoin. So
yeah,
we'll see. I think I could see that pump higher as Trump gets in here, but
yeah, I saw MicroStrategy is also coming back a bit. It was up 8% on Friday, and yeah, that's just gonna track Bitcoin.
This is another one that it's completely following Bitcoin. So
yeah, 100%. I think this ticker, I don't know if you have seen this thing, WKSP. This one is a bit interesting in terms of if you are into crypto and that stuff, the XRP one, because I think they have made a payment thing with the XRP. I'm not sure. I didn't read too much on it. I just remember I read something like this. So it would be interesting to follow this stock if it has a pattern of breakout or something, and XRP is also breaking out like it has done.
Yeah,
small market cap though.
Yeah, so it says WorkSport basically is using the same strategy made by Michael Saylor's MicroStrategy, the New York-based company, which has a $20 million market cap, is investing up to 10% of its cash reserves into Bitcoin, and also Ripple's native cryptocurrency XRP. At present, that equates up to about 5 million. This shift is intended to protect the company's assets against inflation and to enhance transition efficiency, the company said. Since Donald Trump's election a month ago, at least a dozen other companies have announced they plan to stash extra cash in Bitcoin, but WorkSport's embrace of XRP, the third largest cryptocurrency by market cap, is different. I think XRP is becoming a much more stabilized currency and asset. And well, I think that over the next little while, it'll be volatile like most assets are. We think that it'll be stable enough and bring value for us to build, for us to put cash there and enjoy some of the upside potential. So definitely interesting because I know we kind of touched on this last time, but for those of you who don't know, so what MicroStrategy is really doing here is they aren't just investing in Bitcoin. What they're actually doing is, because they're so heavily invested in Bitcoin, initially they benefited because there wasn't the option market and everything like there is for the cryptocurrencies. Now there's all that, but initially there wasn't. So you were able to invest in MicroStrategy. And what they did is they basically created an entire market of cryptocurrency just around their stock because they own so much Bitcoin. So that's a strategy. So if WorkSport's able to do this, you could invest in WorkSport, which would be kind of a third-party play on it, as well as you can now maybe start to take XRP a little more seriously as a cryptocurrency.
I think if what is the website that you track the different ones?
Different cryptos?
Yeah.
There's quite a few. I would think TradingView you could do it.
Coin market cap. If you look at this, XRP is the third largest, right?
Yeah, I just want to go to the same website here.
It would be interesting. It has a long way to take Ethereum at second place, but you know, it's on the way up. So if it takes the second place, this will be very interesting to follow, I think.
Yeah,
it's a long way there.
To be honest, it's kind of surprising too that it's even beating out Tether, and Tether is connected perfectly to the U.S. dollar, which gives it some kind of actual like tangible value because it's tied to the dollar. So Tether, I always thought was actually an interesting cryptocurrency. A lot of these smaller names I don't know much about. I don't know what sets them apart besides they're probably just similar to all the other ones.
I saw one now moving called Trump, right?
Yeah, I did see on Yahoo there's some Trump coin that's flying, but I mean, it's just I don't know. It's no different than fart coin. Okay, I'm not investing in fart coin.
Yeah,
which is now the 56th highest market cap. Just kind of insane.
But it's still like Bitcoin is gonna run the show for like Bitcoin decide everything here. But you see, if XRP, even if Bitcoin is down, can take the second position. So yeah, it's just something I have been looking at, and it's probably gonna take a lot of time. But if you see some kind of breakouts on WorkSports also, maybe it's a good candidate to go into.
True. But yeah, I mean, this is pure. What do you call it? Momentum / just human psychology on these coins, because most of them, I mean, they'll never amount to anything anyways.
Here I have the Trump coin, official Trump. Volume the last 24 hours, 20.6 billion in dollars.
It's nothing to shake your hand in here. What? Man, I can't believe it. So the thing I just read said, when was that from? Because now this is saying that XRP, so this is saying that the market cap for XRP is 178 billion. Is that right?
Yeah, it is right.
Jeez.
And Ethereum is 384 billion.
Yeah, it just seems like a lot of money
Yeah.
to be in some of these coins. Like
Yeah.
it's wild to me. Dogecoin is $54 billion. It's worth $54 billion.
I didn't think they were so high up on this list, but they are actually the 7th largest one. And then you have Solana. I've heard about Solana for a long time. They are on the 5th.
Yeah, I mean, I've heard a ton of these, like this Shiba Inu coin and Stellar. I remember hearing that one. Tron. I see official Trump now on here. Trump's now 13. It's raised $14 billion.
And that happened overnight, right? Almost.
It's like, it makes me wonder how many people are laundering money through these, because like it's all just nonsense. But I mean, it's crazy. It's crazy the amount of money stored in these things, hundreds and hundreds of billions of dollars.
Yeah. I see
like,
also Solana. Sorry?
I was just saying, I'm scrolling through. I'm on page 4 now. So this is the between 300 and 400. You know, even if you go to 400, it's still worth over $100 million, that coin.
Yeah.
I mean, that's just insane.
And you have a lot of them too.
Yeah, there's over 500 coins, or around 500 coins that are worth almost $100 million or more.
Yeah.
That to me is just wild.
It's definitely like, of course, everyone takes it serious, like this cryptocurrency but we don't need to talk too much about it. It's pretty standard conversation when you speak of this, but it's just the value, right? It's hard to justify the value of these. But when you see this type of money being tied up to these names, it's who says that this will not continue?
I mean, I have nothing to say.
Yeah.
there's a lot of different weird names up here, and you know, I'm scrolling all the way down, and I mean, there's coins that have, like this one's got $3,000 invested. Like someone just like made a small coin.
Yeah.
This one's worth $282.
Yeah.
Yeah, I just scrolled back to like the last 10,000.
Yeah,
And,
this one.
But even here, even at 10,000, there's still stuff that's worth millions of dollars.
Yeah. Yeah, it is. Ing Protocol, 10 million. Position 10,615.
Yeah, I mean, to me, this seems like just a way to get your money taken.
Yeah.
way down here. But
yeah.
Yeah.
Okay.
I have a lot of faith in those.
But definitely interesting, because also, like you said, on XRP's chart, it's a pretty clear breakout, right? That pattern.
Yeah, that's what I'm saying. I mean, you know, I wouldn't try and pick one coin over another. I'm never going to be able to tell you which one of those coins is going to take off, but I could certainly pull its chart up and tell you which one's going to break out.
Yeah.
So yeah, I guess it's a market to look at. I haven't really focused much on it. And the only thing that I do know is the crypto market, because it's also super volatile. So there can be a breakout here, but if the overall market turns, you can see some of these names break down by a lot.
Yeah. Yeah.
It could be a long time. I mean, we're talking months to years before it comes back. Now, granted, with our style and stop losses, it wouldn't matter at all. But just something to think about if you're going to go into crypto.
Yeah. You can even look at the Bitcoin chart now and make a good case for it. If it goes a bit higher.
Yeah, you want to know what's strange is all these dips. If you pull up the 1-day chart on this MAGA coin,
MAGA.
yeah, pull up MAGA as the ticker.
It's which crypto? This is this?
Yeah, it's
No, it's
crypto.
not this.
It's MAGAmemecoin.com, USD Trump.
I'm not sure if I have it.
Go to Yahoo Finance.
Yeah.
My point being is, like, I see shady stuff like this happening all the time. And like there's dips, and I don't know if it's just because of illiquidity, but there's dips where people are buying this. Yes.
Yeah.
And you see how there's these dips in the day?
Yeah.
Like that means someone's buying down at these crazy low numbers, like buying around like $7, and then it's skyrocketing back up to $25.
Straight away, yeah.
So like someone's making, 400 times their money in like a few minutes.
Yeah.
So I don't know. That's one thing I'm just pointing out to be careful with some of these names, because it's crazy to me. Something's worth, $40, and then it's worth, $7, depending on the minute you look at it.
Yeah. Yeah, no, I'm not touching this this type of stuff.
Well, that's what I'm saying. Is the other thing too is like, if someone has a bunch of shares in here, they could just drop the price on you real quick and stop you out, and then buy right back in.
Yeah. There's a video of a guy, right, where that happened. Like it just goes to zero. It's a rug pull or whatever you call it.
Yeah. One company that I had kind of got screwed on and stopped out of was Vance, and VNCE. And the actual daily chart doesn't quite do its justification, but while this was going on, there wasn't a ton of volume on some of these earlier days on these breakouts here. I know it's 600,000 by the end of the day, but by the time it had broken out, there would only be like 50,000 volume, 100,000 volume, and there was definitely someone doing this because the stock price, if you could zoom into the date or to like intraday on these, it was wild. It would be it would go up by like 50 cents and then down by like 60 cents, and the buy ask spread would be like 60 cents apart, 50 cents apart.
Yeah.
And I think someone was just in there just whopping people, just taking them for everything they had, because if you bought, they'd stop you out immediately by like a 30%, like a 30-cent move or something crazy. So
Yeah.
you do have to be careful with some of these liquid ones, because you can definitely get kind of whipsawed around in these.
Yeah.
Like if you go to the 60-minute chart, you can just see how sometimes it'll be up on some of these days and then shoot right back down, and it would do it all day. Because I kept an eye on it, because once I got stopped out, I like to just kind of keep an eye on these things.
Yeah, you have
This is one of the
multiple
ones
candles.
that, you'd be all over the place.
Yeah.
So
Well,
one thing to also think about at a small market cap like it is, because this was definitely down towards my when it first broke out, which I guess you could have argued any of these days. The 18th, towards the end of the day, it broke out. The 19th was definitely breakout, even though that day it pulled back. And then the huge move it made on the 20th. Of course, I got stopped out right before that big move, which sucks, but is what it is.
Okay.
Maybe on some of these ones that whipsaw around so much, maybe a smart move would be to buy end of day.
Yeah.
And that way, if the next day it breaks down, is what it is. But, the other thing, buying at end of day, what can happen if you wake up the next day and it's way down. So
Yeah.
there's the risk there.
Yeah.
But
This
you
has
know,
an
you can
ADR
limit,
of 31.
yeah, you can limit position size though, so that doesn't happen to you.
Yeah, that's true. Yeah, it's definitely. Do you think these people how do you think that's organized?
I mean, like I said, it wasn't that much. So you think about it, the shares are worth $1, $2. So if you had 50,000 in cash that you were like, let's say you had $1 million account, you could put 50,000 into this and you're almost the entire amount of volume.
Yeah.
You know, it's a risk you take because there could be another whale right behind you that sells out on you doing that. But if you bought 50,000 shares at the start of one of these moves and you've created most of the move, and then every time someone's like able to buy, you're basically like, you know, putting a bid order or an ask order in, you know, well below the price. You're just gonna cause it to go up and down as long as there's, you know, it stays a liquid. Once the volume comes in here, and then you have like a bunch of people, you can't do it because they'll push you around. But initially on some of these names with low volume, they can kind of get away with it. And like I said, towards the end of these days or the end of the day, it would jump up to like 1 million, you know, like there would finally the volume would finally come in. But during the initial mornings, there would only be like 50 to 100,000 volume, and it would have already made a decent move because it kept popping up for me on my watch lists. But
Yeah.
you know, something to be careful of. But once again, another one that would have you would have done pretty well if you had held for 3 days or even just taken a percent
that's
gain.
true.
But see, this is one of the ones too where you know, we talk about the 10% gains and you know, locking that in. Well, I see stocks like this one and I'm like, man, if you had held this for the 3-day time period instead of just taking 10%, this is when you're up over 100% in 3 days.
Yeah.
So, you know, and that counts for 10 stocks. You know, I have to make 10% trades, or I could do one of these, you know. So yeah, don't get me wrong, stuff pulls back, but if I'm losing a few percent here and there on pullbacks because I didn't sell it just at 10% versus holding for 3 days, and every once in a while you catch one of these names that move 100%, I think I'd rather go for the hundreds.
Yeah.
But we'll see. That's why I think it's important to keep your patterns and keep look at all your trades and just kind of keep an eye on those stocks, see what they've done, see what would have been the better move more often than not, and that's what I've been just kind of sticking with.
Yeah. I saw Nikola moved again this week a bit. And like I've said before on the stream, this ticker keeps having pretty crazy volume. Not crazy, but it has a lot of volume when it first starts to move. There's no setup here as far as I can see, at least, and I don't like the chart at all, but this stock regularly has this, and you see it pulls back often as well. But if Nikola has a good setup, I'm probably gonna go into it because I know the history here with how it can move.
Yeah, you know, the more I reflect on deep value, if you're trying to find a true bottom in some of these stocks, or at least a good margin of safety, all you have to do is look at the cash position and how much they're spending and see how much time the company has left, because it should be a depreciating asset in terms of when it's going to go bankrupt. So if something's worth $1 and let's say by the end of this year they're going to run out of cash, each day it should depreciate, you know, a 365th of whatever that price is, because as it gets closer and closer to running out, now don't get me wrong, it's never going to hit obviously worth nothing until actual bankruptcy, because it has optionality. There's a chance that they get funding or something like that, and it turns around, and that's where you can catch a real bottom. But when you're really deep value investing, that looking at that credit risk and understanding how much time is left before that credit risk triggers, that's how you can find real bottoms in these things. But you do have to be careful, because, you know, you buy it $1 and you hold it for half a year, you could be down 50% by the end of that year because they didn't turn it around. So
yeah,
it's going to continue down here. But if you could find a base somewhere in these, you can make moves on these. And if you do catch one that really turns around, I mean, that's kind of what RK did. He caught GameStop at the bottom, and, you know, the company happened to turn around, and he's just a nut who bought options on it. But that's where also doing your fundamental analysis really comes to your benefit, because not only did he know that the company wasn't going to go bankrupt, but actually they were putting themselves in a good position to get cash back in. that optionality is what can cause some of these deep value ones to turn around.
Yeah.
So to me, I don't like doing these charts more for this momentum style, but I am, as always, keeping everything in mind. As I've learned to read breakouts of momentum and understand supply and demand side on the chart, the technical side, it makes me think back on what I was doing when I was doing the fundamentals. And you can do really well if you kind of put some of these strategies together.
Yeah.
At this
It's
point,
crazy.
just because I'm focusing on momentum, I don't want to blend the strategies too much. I want to just focus on and get this one down pat. But going into the future, that's something I'll definitely watch.
Yeah, no, I agree. I've been thinking the same. Like, that would be very beneficial, I think, to find something that you see consistently working, where you combine, everything that we have done.
Yeah, and even you and I, in terms of like a company that we just knew well and we knew wasn't going to go bankrupt, like Alto. We knew where the bottom was. When it got down below like $1.30, we're like, every time it's down here, it's going to come off, because at that point the assets become worth more than the share price. And like I said, they're not going to go bankrupt right now, so there's no risk of default. So buying down there is a safe buy. Essentially, your margin of safety is there.
And you saw the same in Ring Energy, that like around 120 there, it kind of always went up to around 180, or it did it often.
Yeah, and then they also always break down to like $1.20.
Yeah, exactly.
Like that's always like the low, because then the company's just at least worth that at a base minimum, So those are things going forward I would really be focused on, to bring my technicals into some of these companies where you're really trying to catch bottom and do more of the bottom feeding stuff.
You could make some money in that. I'm just looking at the GME chart, and it's a bit crazy, right? If you go to 14th of May, that's he started to tweet, Roaring Kitty.
Yeah. Oof.
That entire move, and the other spike is when he started to stream, or when he streamed that one episode.
Right.
It's 100% him that moves that stock, right? In these two periods.
Yeah, and I mean, who's to say when this got back down to this? Where was this? Like the $10 mark, when it was right down there.
Yeah.
If he's doing anything in that region, buying somewhere in there, I mean, this guy's buying options, and out of the money options too.
Yeah.
The next day or the next week, I moved to $50.
And it was just a picture that he tweeted.
Yes, of him leaning forward, someone leaning forward.
He has figured out how to do these things, I think.
Yeah, I think at this point now, I don't know if it would ever happen again, because he has posted things that's never really worked since that point. But the initial strength of his message was always there. Yeah.
I think he could have some kind of impact if it's clear that he's moving to another company and starts to do there. He will get the following into that one, for the short term at least.
Speaking of shorts, I'm sure if he moves into a company that has any kind of short flow, he could cause damage to those guys, because he has an army of traders looking to hurt shorts. So
yeah, for sure.
But yeah, and once again, I mean, this also too, though. Look at May 9th for GME. I mean, it's a clear breakout on that day.
Let me see. May 9th, yeah. I got it. Yeah, it is.
So May 9th, you have a clear breakout. And then, if you had held that for 3 days, oof, you would have got in somewhere around 16 and been able to get out at the end of the day at 50. In a 3-day move. I mean, that's 200%.
I would take it.
Whatever it is, in 2 days.
Yeah.
I mean, these are portfolio changing moves with essentially no risk.
Yeah. It would be
It's more the
interesting to
wild card.
see. That's a bit crazy. It's a bit crazy that that actually has a breakout before that spike.
That's what I'm saying. Like
Yeah.
it still works. It's
Yeah.
still it's still there every time.
Yeah.
And even before that, I mean, you know, it had found a base at 10, kind of went up from there and then pulled back on like from April 26th to May
May.
1st. It
Yeah.
had a little move and pulled back, but then technically May 2nd, there's a breakout there.
Yeah.
And once again, you would have held that for 3 days. It ended May 6th at
30%.
16.
Yeah.
So I mean that's you know there, and that would have got your eyes on it, and then you know like I said, you have a 3 or 5 day sell rule. You would have got in on one of those next days. Then you see it break out again on the 10th, and then you know from there, or the 9th, and from there that's a straight move up.
Yeah, and that also went far above the Bollinger Band. So you would probably sell there, you know.
Yeah, if you wanted, or you could have, like I said, you could have tried to buy around Bollinger Band and got in even on like the 10th. The 10th, once again, it went down to Bollinger Band, tapped it, and went, and that's the lowest it got. So that Bollinger Band, I keep an eye on it. I know you guys said you took that out of some of your models just to
No, I have it on.
things, which I
I have it on again.
Yeah, I gotcha. But because I constantly see it tap off that line, so
Yeah.
I just keep it there because and like I said, USEG, I ended up getting 6% off that, or 7%, which not anything crazy, but kind of a free move that I got into, even though I had missed actually the breakout.
Yeah. Oh, we have David in chat, Dane. He's
Wish I
saying
could
good
see the
morning.
chat on my phone.
Yeah. Good morning, David. Nice to see you back here. How's your
Morning,
week
Dave.
been investing wise?
I did tell Yannick, Max, whatever you want to call him.
Yeah.
That we
in the
look up some of
Discord.
the tickers. He had thrown some tickers our way. I looked at the charts. The charts are nothing. It's all deep value stuff, but I didn't know if you want to pull up the fundamentals for him.
Oh, I haven't seen the tickers actually. But we can do that.
It's just in the Discord in the general chat.
Yeah, hold on.
Hey, I'm just gonna run to the bathroom. I'll be right back. Okay.
Yeah, I'll just do this.
All right.
I'll pull them up. They look like pharma companies, but I'm just checking some charts too, Dane. I told you about the spike in the NNBR chart, right? Did you see that?
Yeah, I did. I peeked at it real quick, but hang on.
That was like 100% almost in a day.
Yeah, very random.
Yeah, very random.
But this is just kind of the day trading phenomenon. You know what I mean?
Yeah. It went up to 4.
You know, this is also too, like, this is why, you know, even though technically it breaks out again around like 437, 440 on this chart,
Yeah.
it's up so much. Like, I'm not buying on that.
No.
You know, I'm not buying it 200% up and expecting.
Yeah.
If you were going to buy there, I would buy, and then I would immediately scroll to like the 1 minute chart and I would day trade it. I would not hold that because it's just up too much in one day.
Yeah.
You look at how many things move over even 100% a day. Very few, you know, very few.
Yeah.
Names that aren't just kind of like nonsense. Like this actually has a market cap and some volume, so not necessarily a name I don't take seriously, but at the same time too, the overall chart's down. Just a lot of things not good about this.
Yeah. Well, I'm pulling it up now. NXTC is the first one. Straight away, it doesn't look very attractive to me. But it has very little depth though, but
I believe that was his thing, is they're all net cash position.
yeah, because they have also a lot in book value. But yeah, it's a biotech. So is that in patents and stuff, do you think?
Sorry, what about it?
No, they have I get 270 per share in book value.
Sorry, you're on the first one?
Yeah, I'm on, it's called NXTC.
Okay. Well, I'll just pull it up real quick.
So they have a lot of cash, yeah.
Yeah. So once again, just kind of my thinking on these kind of things is, you know, at this point, the way I'd value these is in terms of options. You know, very little debt, good cash position. How much are they cash burning a year? You know, their assets have been shrinking greatly. So I'm assuming that's all cash that they've been losing.
That's cash probably, yeah.
Yeah. So the thing with biotechs is there's a few things that make this one, the biotech ones, even though they're net cash positions, Yannick, the thing that makes me kind of worry about these ones is there's going to be infusions of cash coming into this company. It's probably going to be by private investors because they have some kind of reason to get this working and keep it going, as well as there's companies out there, if they really want a medication that they're working on, they'll keep throwing money at these things. But net cash in these ones, it's not like an actual business that if, you know, it doesn't work out, that they can't sell some of those assets and at least get some of that money back or whatever you want to call it. Like these guys, it says, do they have any actual drugs that they have working? Because if they have things that are working, or at least, you know, if this is all pre-clinical trial type stuff, which it looks like it is, then you're taking a real risk, because even though it's a net cash position, if this ends up not working out, the whole thing will sell right off. So this is no different than almost any biotech. Like, it's a biotech that's in a better standing position right now just because it has a little bit more time, since it's not burning through all its cash. But at the same time, it is burning a lot of cash, and they will only have so much time left.
I have 44 million in research and development alone. So that's almost double the cash position that they have.
Yeah, and now granted, they haven't held a ton of cash throughout these years, but that's what I'm saying is, like, okay, so if it's the excess cash remains around that, you know, $20 to $30 million, it seems to be what they have on hand. The assets, though, have been just decreasing all the way since 2020. So in 2020, they had a ton of money, and since then now they're down to 90 million. It says. So if 90 million, if most of that is actual like cash and materials and stuff like that, and the research costs kind of wrapped into that, that means that within a year it'll be at half that, and in 2 years they'll be out. So these are highly risky. And as you know, statistically, 9 out of 10 biocaps don't work. So even though it has a net cash position, I don't think I would hold these just based on that.
Yeah, I agree, but also, I'm never been very into those biotech companies just because of the things we are speaking about here. But it's not that I don't see the opportunities and stuff like that, but it's like you said, if 9 out of 10 fails, and you can say long term in the stock market also a lot of companies fail, right? It's the big one who carries the market, but I'm not that long term in my investments, and then when you look at it a bit shorter term, I just feel like the risk is bigger in the biotechs, and I think a lot of people do that as well. But it's not that I don't see the opportunity here, but yeah.
Yeah, and we were talking about book value before. I get like 270.
Yeah, I have the same.
But if you look each year, it's been going down by almost 30%.
Yeah, a lot.
Which gives it just goes to show you how little time they have left.
Yeah,
and actually, it's almost down 50% this last year. So
yeah, and also they are far away from making any money. The earnings are just growing in the negative direction.
And
so
if you really, if you really were following the trials on this, and this drug, and you think that it's going to be successful, that's what I would invest on. I wouldn't be. Yeah, great. They have a net cash position, and maybe someone would scoop them up for that. That's why, like Tobias, talks about the acquirers multiple, because when it gets down to these levels and the enterprise value is cheap, it could be scooped up. The enterprise value for this is $9 million. So if someone wanted to take this in, some bigger drug company wanted their information or so far all their trials, and they wanted to take a head start into this, they could just buy this for $9 million. And yeah, sure, you'd get paid out there, but maybe they'd have to pay over that. But I just don't think there's a ton of room there for error. Which,
and I'm looking on X also, and I don't see a lot of people talking about some promising. There is some research, like of course it is. That's how it is on all of these, but the thing people are pointing out is the cash position, which is good, but like you say, they are also burning a lot of cash, and at some point that they probably need more here.
Yeah, and I've kind of talked about the way I view risk and whatnot now. If I was going to be investing in biopharmaceutical companies like this, and I was going to look for book value and things like that to go off of in terms of just hedging my odds of which ones I could get out of, because what you could do, for instance, if you want to keep your stop loss at a certain amount, let's say for a company like this, you'd be willing to put like a 10% stop loss on, or 15%, something a little higher, because it's risky as is. You could buy in here and then just make sure that, it's only like a 2% of your portfolio position, because if a 2% position goes down by 10%, you're not really taking much of a hit on the overall portfolio. And if it works out, if any of these double, you'll be really well off, or double, triple, whatever could happen with one of these if you're correct. But just know, for every double or triple, if 9 out of 10 fail, that means you have to offset 9 losses essentially every time. So 9 losses compounded at 10% versus whatever you'd get on one of them working out has to work to your favor. And then how long's your holding period? If these things take 1 to 2 years to go through trials, do you really want to hold 10 of these names and you're holding them for a year to hope that one of them takes off?
Yeah.
And, the other thing too is, if 9 out of 10 fail, that means you could easily pick 10 out of 10 to fail. It doesn't guarantee you that one of them's going to work. If anything, your odds are against you. So just tough to look at these names.
I'm also just checking like the news when they have released some news around the company, and the last 2 news they are released, and on that day the stock is down even if the news are somewhat promising, or at least it's a step forward,
Yeah.
Because a lot of these also run on news, right? Like everything else, but maybe bigger.
Well, news, and also too, like, on November 20th, the big news for them was that they filed for a 200 million mixed shelf offering. So anytime they can raise money, it keeps them from, it extends that room that they have in terms of making sure that they could get a product to work. And I would say it's somewhat bullish, because if someone comes in and invests here, it means that there was enough convincing evidence that they think that the drug could work out, that they wanted to continue to invest here. Some venture capitalists came in here and, paid for, $30-40 million, whatever they put into this, on the chance that they think it could work out. So you do have that going into it. But, if you also have to think some of these companies are, $5-10 billion companies. So for them to come and put $10 million into one of these pharmaceuticals, it might not mean much to them either.
Yeah. Well, maybe you think completely different, Max, but I think we agree a bit on this one, Dane, right?
Yeah, I'm just saying, as of now, what I would do is, if you were really going to look at these, I would really dive through, make sure you understand the science, and make sure you understand how close they are in trial to actually putting out a product. And then the more important thing is, whenever one of these drugs or whatever they're making is going to be developed, what is the amount of people that need this? If on average, if there's 1 million people in the world that need it, well, there's probably about 1 million sales. So what can they sell this at? If it's something that it's only, 1 out of, so many groups of people, if like 1 billion people around the world could use it, then sure, you have a huge market there. And if it works, it's going to be huge. But if not, it just limits your actual, total market that you could get.
Yeah. Let's do PMVP then, the next one.
Yeah, I had them pulled up. They look very similar in terms of kind of their structure right now. They have a little more cash on hand. It looks like they have a little bit more time.
But in terms of the rest, they look similar, yeah?
Yeah, but think about it. I mean, like I said, it looks like they have about double the amount of cash and maybe double the amount of time. And what do you know? The stock price is double the other one.
Yeah.
You know what I mean? Like, one's 70 cents, one's $1.40. Because like I said, as you continually get closer to where you run out of cash, you take that risk on of it going bankrupt. So this continues to just trickle down, essentially, unless there's some kind of big news moving it in the other direction, which happens.
Yeah.
Just rarely.
And I think the last news I see from this is in November. And that was the earnings.
Yeah. And, I mean, this is one too. I would probably be using momentum if I was going to try and trade one of these, because if something good does happen with this company, like really good, you would watch in one day this go to breakout territory. And yeah, I'm probably not going to be able to get on that first day, and maybe not even on the first breakout. I probably would just let it go up wherever it lands, let it trend sideways. Because, for instance, if it does break out here, one of two things happened. Either there's good trial data, or there's some kind of offering and they got a bunch of money. So now they have, like I said, a much longer time horizon. And then if you wait again for the second breakout, either it's because things are looking up, and or the next trial came out and the next trial was positive. So in just terms of the way that these can be played, you can essentially let the news come to you first and then make your decision. And sure, yeah, you won't get right in at the bottom, but I would much rather pick them when I know the ones that I'm picking have a high chance of working versus knowing 9 out of 10 fail.
Yeah. And the last one, is it similar to, or?
I'm just pulling up that one now that you say that. I mean, it is a it's biomarket or biocap anyways. Most of these are different things to do with cancer solving drugs. Which, I mean, I know that's, you know, that's what everyone's focused on, is trying to come up with ways to cure it, which, you know, I'm all about the mission there, but just trying to be realistic on how many of these actually develop into something working.
Yeah.
Yeah, another one.
They had even more cash.
Yeah, but they burn a lot of cash too.
Yeah.
Like they burn almost 200 million a year. So
Yeah.
they actually, without selling off some of their assets, they actually could be bankrupt really soon.
Yeah, because they also have a little bit of debt.
Right. So they actually have issues in terms of their time's running out here. And don't get me wrong, Max, like when I look at this too, even though mine says levered, it doesn't even tell me to offer shares, because they do have a good cash position. So it's not necessarily that they need cash infused right now, but just knowing that there's no cash going to come in, like this isn't going to get cash coming in unless someone buys them, which I've always said, I'm never buying something on the hope that it gets bought.
No.
That's impossible to predict. The only thing that you can use as a predictor is, I think, like an acquirer's multiple, is just that it looks like it. But with all these biotech things, it's hard to say. Most of the times when biotechs get snatched up, it's not during trials. It's after, when they've proven that the drug works. And now some companies happy that they did all the legwork, and now they'll pay up for it.
Yeah. Yeah, not really any promising news on that either. But the earnings, the past actually 3 out of 4 has been a positive beat for them. So yeah, if that counts for something.
Well, I still don't really care about earnings for a company that doesn't make cash.
Yeah, no, I agree.
But you know, and we had talked about doing the 10% rule for a stop loss with, you know, our initial deep value style. Should have stuck with that. And you know, that's what I got that from Burry. That's what Michael Burry does.
Yeah, yeah.
And Michael Burry used to trade, so you know, I can kind of see his evolution as he got bigger. He switched back to investing and did it that style, because like I said, you get to a certain size, you really can't swing trade as you can still swing trade. You can't day trade for sure.
Yeah.
It's just too much money to move around. And from that point on too, I mean, I would argue that Burry's more of a position trader at that point. You know, he's not quite an investor. He doesn't usually hold stuff for quite that long. He still trades his positions, but you know, he's not worried to hold something for a year or two either. Kind of lands more in the RK territory, somewhere in there.
Yeah, they were similar, and they were also they were very similar, I think.
Yeah, and you know, like I said, I still see a lot of merit in that strategy.
Yeah, I too, and I love it, but I'm very interested about this swing trading thing also, and I can see the benefit of both, and if you manage to succeed with swing trading, it will deliver some good results for you quicker.
Yeah.
And you can eliminate the thing that we experienced a few times with a huge drop overnight for like 60% moves and stuff like that. Because you know, in Alto, for example, it's a heavy loss for me. For example, in that one, and if you just do the swing trading with the rules we have set up now, a lot should go wrong for you to experience something like that, I think.
I don't think in this strategy I could really do anything close to the damage I did
No.
before. But
No.
but the big thing that's different now is my position sizes are limited. My
Yeah.
stop loss is tight. And I would do something similar even if I went back to what swing trading really taught me is all about risk. Managing my risk better. I wish I had looked into that just a little bit more before I was doing what I was doing before. And the problem was just being greedy. I had done really well by keeping my position sizes small, and then thinking, well, okay, if I'm picking them well, I might as well up my position size. And I did that kind of to the extreme and got burnt doing it. But that's how you learn.
Yeah.
Was there any breakouts that you had seen recently that looked like they were about to start on anything?
No, I think I just saw some quantum names were up a little bit again this week, but I have not seen a clear breakout pattern yet, because they fell so much.
Yeah, I'm just looking at some of the names. ALTS looks pretty good. It's consolidating. It didn't break out, but it looks like it could.
Yeah. Yeah, that's true.
BFLY's kind of been just kind of bouncing around.
Which one?
BFLY, Butterfly Network. I've caught some of their past moves. They're a pretty strong momentum candidate. Backed Holdings has kind of been going sideways for a while.
Yeah, I saw that one.
BKSY looks decent.
But
there yet.
BKKT will be interesting if you get that breakout above like 37 point, 37 mark.
Yeah.
Yeah.
Clear point.
That looks a lot like the Faro chart.
Yeah. Yeah. So, and this is the thing too, in terms of my screening, like my goal is to have like these names just kind of close when the market starts. And I check these names kind of constantly to just see if anything starts to push through, and those would be almost automatic buys. And then on top of that, there's a bunch of names that I might not have seen. So when I'm screening through the day, I'm just seeing what's moving. And if anything kind of falls into my criteria, I can do a kind of a quick deep dive on it. And if I like it, I'll try it. I'll take the position. Worst is I get stop lost out. But a lot of these right now, it looks like they're moving sideways. So
yeah.
We'll see if the overall market's able to push up a little bit here. You could see a lot of these names break out again.
Yeah, they need a little bit more time, I think.
Yeah, most of everything I look at looks like it's just kind of moving sideways.
Yeah.
There's a few names.
I saw ULCC, which looks a bit interesting, I think.
It's actually one of the companies I own.
Yeah. Okay.
Yeah, I had just bought them. I think they're one of my only positions. I only have ULCC and I think CGNT still.
Okay.
LX looks like it just broke out. That's an interesting one.
Where did you enter ULCC?
Let me just.
If you remember. Was it like on 6th of January?
No, I think it was just on Friday.
Okay.
No, obviously it broke out on the 6th. The 6th was a great buy. But let me I just want to see what my cost basis is real quick.
Yeah.
I didn't get in until 8:53. So
Okay.
I'm just in the position now. So I think I bought that one. I don't know if I quite bought it at open or not. What did it do on Friday? Oh yeah, so it jumped up right in the morning and then
Hold back a bit.
Yeah, actually, I bought towards the end. I might even have bought that at the end of the day. Now I'm thinking about it. I don't remember.
It looks good at the end of the day with some volume coming in also, just like before the close.
Yeah. So, I mean, obviously this would have been a buy right when it opened. Obviously I didn't get in there,
Yeah.
but it still looks like it could push up from here.
Yeah, it looks good. I saw because I got my books. I wrote it in the description. Finally, I got my books. I started to read the O'Neill one now. One thing I noticed on the charts in the beginning of that book is he often has a note saying like, don't buy on this third leg up because it's a fake breakout often. Is that something you look at? Because this would be the second leg up, right, on ULCC?
Yeah, but it's not. He's not saying just on the third breakout. He's saying because he gives you different reasons why it's not a true breakout. And I believe his stuff was always volume based.
Yeah. Okay.
Like it might have been the third breakout on some of those charts, but I don't think it was just because it was the third breakout.
Okay,
Stuff tends to break out 4 or 5 times usually. After the 4th time, the 5th breakout, I start to think we're close to a top. Just because stuff tends to take a break after that. If you think about it, something can go up 300%, 400% in a year or so, but after that, it usually takes longer from that point on. It's not going to continue to make that move.
Yeah.
Or very rarely, I should say. But usually it has to do with the fact that, like, if you look at the first breakout, then you compare it to the second one, you just see differences in volume and where it actually dipped down to and made moves.
Yeah.
Hi. So,
so in the third one, it has lost something in when he writes that there's something that the other ones has that this one doesn't have. So he's saying don't buy it there then.
Yeah, and I think O'Neill, what he's trying to do is just provide, because I know he provides it's like 50 or 100 charts or something right off the rip in that book.
Yeah, 100.
And it's more just to get you looking at them and just to keep. And I know he focused on weekly.
That's
and weekly
weekly.
charts are a different ball game too.
Yeah.
Obviously, if you're looking at a weekly chart, you're also going to hold stuff longer.
Yeah.
Like, if you look at some of these bigger moves that some of these things make, if you held for 3 weeks on a lot of these, it ends up doing pretty well.
Yeah. Yeah. We have seen that over and over again. But then where would you put your stop loss?
Well, he always did 7%. He says 7 or 8% no matter what. So I'm assuming his goal was always, I'm assuming it was a 3-to-1 reward risk ratio is what he wanted. Maybe happy to take a 2-to-1, but I'm assuming if his is set at, he would say never take 8 or never take more than 8. So if he's taken 7% on average, he's probably shooting for 20% returns on his moves. And I imagine as you get bigger as a swing trader, you should probably start to zoom out, because if you're going to look at bigger companies, like we said, they're not going to move in 3 days. But if you're able to hold them for, a week, couple weeks, month, whatever, somewhere around there, you probably can make that work pretty well.
Yeah.
At least for the bigger names, like pull up like NVIDIA and them and see if you did daily, how tough it is versus if you did weekly. Weekly, I mean, you can catch pretty good size moves constantly.
Yeah.
Where daily and, selling in a week's time, you're not going to make much doing that. It's going to be small returns.
Yeah. Yeah, I will.
And
then I kind of have to go.
Yeah, that's fine. Everyone's waking up here anyway, so
yeah,
start my day here anyways.
But good to be back here streaming also, and I think I'm very excited to see Tuesday. It can go heavily in both directions, I think, and my gut feeling is that it will be a good day right now, at least. Yeah,
I would think.
Yeah.
I think we'll be in a good spot here. And, just talking about the weekly thing, I pull up like the monthly, and the monthly works really well too. When the monthly breaks out, it usually breaks out for at least 3 months. So,
Yeah.
or 3 to 5. So similar to kind of what Qualamaji and Pradeep and all these guys are saying. So
Yeah. Nice.
all right, well, have a good rest of your weekend.
Yeah, you too, and everyone. Thanks, David, for tuning in. I know we have a few new subscribers lately, then. So thank you for everyone who subscribes to the channel. I hope you can get some value out of this. Even though we focus more on the charts now, I know a lot of our subscribers started with the deep value things, but we will probably move on with more, looking at the charts. That's the plan, at least.
Yeah, it'll be continuing to be a mix, and I'm never going to discount fundamentals because those fundamentals are what move companies, whether it's narrative or actual numbers. That's what moves things. So
Yeah.
That still should be the main focus. Even when you're technically trading, there should be some reason why these things are moving, and if there's really no news story, like you said, it is a reason to be hesitant to go into a name.
Yeah, that's true. And if anyone wants us to pull up some tickers, just in the Discord or on X or wherever, just send us some tickers and we will happily go through it in the fundamental sheets. That's
we'll
not a problem.
Pull up anything from Discord. You can comment on YouTube too. We try to get to those. So
yeah.
Just let us know.
All right, nice then. Enjoy the weekend, everyone, and we will see you probably in a week again, Saturday or Sunday or something like that.
Yeah, I might be able to do one this week. I'll post in the Discord if I'm going to. Just depends on how things are going. Just trying to time things. And go Bills.
Okay. Go Bills. Okay, see ya.